What do markets look at from now until the end of the year?
Well, I think it's on the one hand, lockdowns, how long would that take? Is it going to take longer, which is my view? On the other hand, I think in the next 2, 3, 4 weeks, we'll probably get more news about additional vaccines and the way how they are distributed, which I think would rather be positive news. And then, of course, there's an aspect to the US elections and handover of presidency. I think that's very important what we see in the Electoral College in December, but also then the Senate elections in Georgia on January 5 would be very important as well. So I think that's the key points for markets to look at in the next weeks and probably till year end.
But Christian, does it make you nervous that actually the markets are higher, but the number of infected, the number of deaths around the world is rising still quite rapidly? Is there, too much hope on the future priced in the markets and not enough of what's happening here and now?
But of course, I think it makes you personally nervous that infections are rising globally, right? So everyone needs to take care of that, of course. The markets try to look through that because I think the attitude is that if there is more lockdowns, you would also get more fiscal help, more monetary help, and that's clearly what central banks have been saying. And same will happen on the political side. So it's a bit weighing in the balance. Is it really only the infections, or is there support coming? And I think for the time being, we think there's support coming. It's tough to imagine really that central banks or politicians would withdraw from the policy at that point in time.
Christian, what gets priced into bonds from now? Again, is it just more furloughs and more monetary easing? Or is there a concern that we could see inflation quicker than expected if we do have a vaccine?
Well, I think what was quite interesting to see was when we saw the results of the US elections, right? First it looked like Trump would win. Then you see that really change in interest rates to the upside. And then with a pure Biden win, there could also be upside because there would be a massive fiscal pack and that would mean higher rates. We have not seen that. It's a bit of the best of two worlds with the Senate probably being Republican and Biden president. So from that perspective, we saw yields not moving massively higher. And our view is that, say, over the next 1 year's time, you will see still a kind of yield curve control by the central banks because the short end is very low. And on the longer end, there will be a lot of bond buying happening from all central banks around the world. So call it yield curve control, although it's sometimes not explicitly mentioned. From that perspective, we don't see a massive move. Longer term, though, I think we have seen with that crisis savings rate very high and consumers coming back, hopefully, once the vaccine is there, they travel more, they spend more money, and there probably will be some additional taxes coming up, and that's an upside for inflation. I don't think there will be massive upside for inflation, but it's not that we end up in a Japanification, and we think inflation is slightly higher next year, and then again higher for 2022, but not a massive inflation run, I would say, but you can see that in inflation expectations already now, so that's what we think is going to be happening, which, by the way, is quite positive for equities again, and for gold, by the way, from our point of view.
Christian, what's your take on some of the technology stocks? So I'm working from home, you're working from home, we're using all this great technology, but is it going to be regulated?
Well, there was also some concern that the Biden government would be much quicker in this. I think there will be more regulation. There could be also some tax coming up, but I think it will be slow and will be discussed. So I don't expect any quick move on this. I think if you look what the markets are doing, I think it's too early for the so-called reopening trade where you would massively go into cyclicals. So I think there's still room for technology. But in 2021, I think there will be a point in time where you say, okay, the valuations are very high in technology and the growth rate we have seen this year is not coming back. So it cannot always be repeated what we have seen this year. And from that point of view, I would say maybe in the first quarter of next year, you need to switch more, not only into value because of the low interest rates. It's not only value, it's more cyclicals from our point of view.